Guys, it looks like they're back. The bears are back in town. The S&P 500 is dropping like crazy. Stocks around the world are suffering today big. And the question is this the end of the dip or is the dip just beginning? In this video, what I'm going to do is I'm going to try and talk a little bit about that, some markets that we could possibly watch during all of this craziness, and my opinion as to where I think we are going next. So without further ado, let's move over to the charts. Before I jump into everything, of course, please remember to hit that like button, subscribe button if you're new to my channel. It does help to grow it, and I'm here to share realistic trading content. So if you're down for that, hit that like button, hit that subscribe button. Let's take a look at the S&P 500. I wanted to start with the SPY today. So the SPY coming down really, really hard on the open. Of course, it is Monday, and you can see when we look at SPY, the market itself is dropping significantly. We saw a big gap open on the New York Stock Exchange as things got going. You can take a look at SPX 500, which is the futures version, and you can see, yes, that has the full candles, and you can see just absolute sell, sell, sell. And I mentioned on this morning's live stream that I was watching this level very closely. Of course, we did get a bounce off of that level, but now seeing some follow through, which looks incredibly bearish. And that's why I'm making this video. Let me show you the 4-hour chart really quick, and you'll see why I was pointing that level out. Back in mid-August, we saw a pretty significant dip followed by an incredibly strong rally at this same level. Now, a month later, we're seeing the sellers come in hot and heavy. At this point, the dip of the S&P 500 is at, let's say, what is that? 4.5%. So that's a pretty good haircut off of the top. Now, if we actually go back in time here to the previous dip, we can take a quick look and see, okay, well, we had here a 2.9% dip. And then back here, we had a, let's go back right there. We'll see this dip lasted until 3.65. So the reason I point this out is that this recent dip, the dip that we are seeing today, is bigger than the previous two dips. And that is a bit concerning considering the fact that if you look at the daily chart on the S&P 500, this thing has been trending. And look at this, you guys. Very, very clean example of a trend line break to the downside. And this is why I think that this dip is more than just a dip. Now, is it a full-blown crash? I'm not here to tell you that. What I am here to tell you about is the fact that we do see some technical readings here that look incredibly bearish on the daily chart. Again, every time price has retested the pullbacks here, we have found buyers fairly quickly, going from a couple percent dips into a strong rally yet again to new highs on the S&P 500 and things like the NASDAQ and the US 30, things like that. This time seems to be a bit different. We are seeing sellers come in very, very strong off of the reaction from the Fed talking about the taper. Now, if you don't know what the taper is, let me explain that very, very quickly. When you print money, it causes the value to go down. The Fed is in control of our money supply. If the money supply were to basically be printed at a slower rate, less stimulus, that would be bullish for the dollar, but less stimulus means not so good for stocks. So it's strong for the dollar, weak for stocks. And this Fed taper, conversation right now is leaning towards that heavily. So that is a real big pressure on stocks and a real big bullish catalyst for the DXY, which we can take a look at here. The dollar moving very, very strong last week on Friday and on Thursday. And now on this daily candle, you can see we started out bullish. We had a little bit of a pullback. The question is it time to get bullish on the dollar in response to this? I would say leaning towards yes. I think we could be headed back to 93.6. And I think that if the stock market does continue to push lower, you're likely to see the dollar do pretty well against some of the other currencies out there. So which other currencies would be most worth noting? Let's talk about that for a second. So when we enter into a period where the stock market is falling and you're seeing the dollar get really, really strong, we would generally call that risk off. Okay, so let's categorize the major currencies really quick. What are risk off and risk on currencies? And first of all, what is risk on and risk off? Risk off means people want to pull their risk off the table. They don't want to be taking big risk because markets look really scary and set for crashes and scary stuff like that. Well, investors don't want to be in on that. So they might pull their money out of the markets and shift their money towards things that are safer. Well, those would be called risk off assets. Things like bonds, things like the Japanese yen is a commonly held safe haven currency. Things like gold, things like the dollar, which we've mentioned already, hint, hint, and of course the Swiss franc. Risk on is things like stocks. You have things like, of course, the Australian dollar. You have the NZD. You have the pound, right? So these are considered more risky assets. Now, why would you ever want to buy a risky asset? Well, risky assets can return very well in good times. But as we see a shift into risk off today, with the stock market coming down very hard, I am saying that these things on the left-hand side look to be a bit more appealing than the stuff on the right, especially with the Fed talking more seriously about tapering and looking to tighten monetary policy, and stocks getting generally, sold off right now. That's concerning for markets, and to me leans me towards being more on the risk off side of things for the time being until we start to lean back into risk on. Remember, less stimulus means not so good for stocks and may slow a little bit of the economy, which is actually the whole point of slowing down. They don't want too much inflation, the Fed. So when they are seeing high inflations, things like that, they are probably going to sort of tighten their monetary policy, which is what we are seeing. We also see out of Canada some elections going on right now, which are causing some uncertainty in things like dollar CAD. You can see dollar CAD pushing higher, trying to make a stab back at the highs of August. So if you're watching dollar CAD, that might be one to look at. Maybe you're betting on the dollar. Maybe you're looking to short the Euro USD. We did see this channel price fell out of favor of that channel, even going lower, and may even see some retesting opportunities. I think Euro USD could be headed back down to 1.1675, especially with all this dollar strength. Amid that dollar strength, that can push things like the pound dollar lower. Take a look at the GBP USD and look at that red candle, you guys. That's a daily bar. Today's movement, as of the time of making this video, is 76 pips in one day to the downside there for the pound dollar. I think a natural place for the pound dollar is a push lower down to 1.36, or where we found support previously back in July and in August. Especially, like I said, if that dollar strength continues, if risk off stays, you're going to probably see the pound suffer in favor of that more safe haven oriented US dollar. Things like the yen as well. We can take a look at GBP JPY. Look at this candle, you guys. That is no joke. That is a serious move to the downside. In one candle, that daily bar is down 155 pips. That's a serious sell-off on the pound yen. Of course, we've got to talk about gold as well. Gold is doing some sort of back and forth stuff. You have to think this is a tricky one because gold is not so set in stone. You have the dollar strengthening, and you also kind of have gold being appealing as well, because both of these are both risk off things to invest in. So we're not seeing too much volatility in the gold market. Now, of course, we can take a look at some of the other markets. Here's US 30. Look at that. I mean, that is just a serious sell-off on US 30. We can take a look at the JP 225, is that right? Japan 225, and you can see the stock market there basically taking a dip as well. We could take a look at UK 100, see how things are going there. Absolutely selling off like crazy from the highs. The UK 100 is down 5%, so just about where we are currently sitting as well. Now, where could we see this thing going? Let's really quick go back to the S&P 500 because this is the main candidate for me. We're breaking through support, and I really don't see key support until you get down to a level like 42.50, which leaves us, if that were to happen, that is a move of down 7% off of the highs. And I think that is completely reasonable to possibly see here in the next few weeks or months. Now, I could be wrong. Things could come right back snapping up by the end of the day. You get some weird stuff happening with the S&P 500. But again, this sell-off looks to be a bit more serious than some of the previous ones where we found demand quite quickly. We're not seeing such a quick reaction to that. So my first reaction has to be this looks a bit risk off. It looks like we may be headed lower on stocks, and the yen and the dollar may be headed higher. Just my opinion, you guys. Take it as you will. Please know this is not financial advice. I'm sharing my opinions as always on this channel, but I want to ask you to make sure to hit that like button, hit that subscribe button if you enjoy. And hey, if you're not already in our trading community, we offer a trading community down below in the description. You can join the Discord, find out information. It's the first link in the description. If you'd like to come trade with us, this is a crazy week and there's a lot of opportunities setting up. So come trade with us inside of the Discord. Link is down below in the description. Have a great rest of your day, guys. We'll see you back next time.